Hello and welcome to Fintech Insider Insights. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. In this episode, we're exploring credit unions, and in particular, credit unions based in North America. We're going to look at what they are, how they work, and most importantly, how they can compete against the banks and fintechs that are increasingly trying to offer better, faster, and cheaper digital services to credit unions' customers. To do so, I'm delighted to be joined by three credit union experts. Firstly, we have Mitch Rosenbaum, Senior Vice President of Marketing and Digital Services at Credit Union of Colorado. How are you doing today, Mitch?
I'm doing well. Thanks, Benjamin. It's a beautiful day here in Colorado.
Can you please tell our listeners a little bit about the Credit Union of Colorado and what you do there, to the extent that's not obvious from your title?
It's a very long title that it is, yes. The Credit Union of Colorado is celebrating our 90th year. We've been supporting members here in the state of Colorado and more recently in a lot of the surrounding states, really with a focus on enabling them to live their best lives. We operate on a here to help philosophy and work to understand our members' stories so we can find the best solutions for them. My role here at the credit union is to tell folks about all of those solutions, to try to attract new members, and also to really deliver that experience to them through our remote channels, digital banking, our online presence, and in our payment services. It's a pretty fun gig.
Thank you and welcome. And thanks for coming along to tell everyone, all our listeners, a little bit about it. We're also delighted to welcome Jeff Guthrie, Chief Executive Officer of the Canadian Credit Union Association, or CCUA. Welcome to the podcast, Jeff. For people who don't know you, can you please tell us a little bit about yourself and about what the association is all about?
Absolutely. It's a pleasure to be here. So I would describe myself as sort of a grizzled veteran of financial services. So I've close to 50 years experience in financial services. I've spent first 25 years in banking, another 20 years as a founding executive, and a number of C-level jobs in the largest payment processor in Canada, and then went on to work at a startup because everyone should go do a startup to learn how exciting life can be at times. It's a very humbling experience. And then 2 years ago, I was recruited to lead the Canadian Credit Union Association as president and CEO. And as the CEO and leader of Credit CCUA, I have the pleasure of working with a team that represents Canada's 187 credit unions and over 6 million members. And we really do four things. We listen to what our members need. We represent them, but at different levels of government, whether provincially, federally, with policymakers and regulators. We keep them well informed of what's happening in the sector and things that could influence them. And we really work to connect them and help them through education, conferences, bringing them the very best in products and services they can examine. Also, I get the pleasure of representing Canada on the World Council of Credit Unions. So I have a board seat on the World Council, and that gives me an opportunity to travel the globe and to work with credit union leaders around the globe.
I think I want your job. It sounds fantastic. Well, very big welcome to you. And also a very big welcome to Sue Britton, CIO of Beem Credit Union. Welcome to the show, Sue. Please, could you also tell our listeners a little bit about you and your role at Beem?
Yeah, thank you very much. I'm delighted to be here. So I'm Chief Innovation Officer of Beem Credit Union, which is a British Columbia-based provincial credit union, one of the largest in Canada, and a new name, Beem Credit Union, but really has been sort of the merger of several credit unions, most recently Gulf and Fraser and Interior Savings. And we're really, sort of embarking on a new journey at Beem. And my role as Chief Innovation Officer is to really be, the cheerleader for my team, which includes strategy, product, innovation, and brand. So really fun stuff, and drive our vision forward. And my background, I tried my hand at the startup space for about 10 years, most recently, and prior to that was about 25 years in financial technology before it was financial technology. So big companies like Finastra and Simcor and others that you may not have heard of.
So before it was fashionable, effectively.
Yes. Yeah, exactly.
Fantastic. Well, welcome to all three of you, and thank you so much for joining me today. Okay, so in this first part of the podcast, we're going to discuss the current state of credit unions and the role that they play in serving their communities. Jeff, I'm going to throw the softball to you. How does a credit union differ from a bank or a fintech? How are credit unions different, and who uses credit unions and why?
Yeah, I always say that the biggest difference is banks serve customers for the benefit of their shareholders, and credit unions serve their members for the benefit of their members and the communities they're located in. And I think that's a huge difference. Credit unions don't have shareholders, they have owner members, and all the profits go to the owners and members. And that's a big difference. A lot of people misunderstand credit unions as being not for profit, and that's not the case. We are for profit, but the profit is for the people. It's really around that profit for people, and where the profit of the credit union gets invested back into its members and serving its members, and also the communities that the credit unions are located in. And what really drives people to join credit unions, really wanting to be part of that, part of a community that is focused on serving, a particular community in which they live or a profession in which they serve. So it's really about giving back and really focused on doing what's right for the members and really understanding what their needs are and how do you best serve those needs, not in a cookie cutter sort of way, but in a very personalized understanding what they need and how it can best be served.
Thank you. Mitch, do you think members expect sort of slightly different things from credit unions that maybe they wouldn't get from a bank or a fintech? Do your members have slightly different expectations of you, or do they kind of expect just the same thing? You're basically just a bank with a funky name.
Yes to both of those questions on both sides of that. We like to call it banking for people who don't like banks. So it's much more coming from a place of trust. And to Jeff's point, that we are here to serve our members, and we're making choices with our members' money on what's best going to serve them. So that's kind of a fundamental to how we can serve them better. However, those members expect the exact same things they could get from any bank. And it's often a misunderstanding that we can't provide that. We do provide the same technology solutions, the same products, and actually in some cases can move faster. So we need to provide everything a bank can offer, but really from a fundamental core of trust.
Yeah. If I can jump in on that, I really like what you just said, Mitch. Like, I don't think of us as, from a customer or member perspective. And now I'm new to the credit union space, so barely an expert. But I think we're a financial institution, right? And our goals are very similar, in that, yes, our customers are members of our organization, but we do have this amazing opportunity to move faster than what in Canada is a giant, oligopoly of banks, right? Like, think of Beem. We have under 200,000 members. I don't know, between the banks they have 50 million. Like, you think about how much faster we can move with our technology projects and our modernizing our offerings, that at the end of the day, our biggest competitors are the banks and the fintechs. And we've really woken up to that and are trying to really do something about it.
Mitch, I want to pick up on something you said about trust. And you said, I think you said, you have sort of more trust with your members. Well, how does that come about? And, can you build up greater trust with your members? And then does that create an advantage for you?
Trust is one of those very hard things to measure. Believe me, we've tried. I think it goes back to a lot of what Jeff was talking about, of we're serving our communities. And those communities are not as limited geographically as they previously were, or even limited by profession, but it's really the community of our members. So we are serving those members as a community. You deliver that trust through experience. So when the member has that problem, the first time they run into a debt they can't pay, or they need financing that they don't immediately get approved for, we have the motivation, because we're there to serve our members, to deliver on that. And that's where you build that trust and then build that referable experience. That is where we can compete. It's a very kind of much slower process than when you think about, the rapid pace of fintech. But that trust is built over time and needs to be delivered over generations. So we need to be able to build upon that and still deliver real-time experiences. Trying to figure that out.
Jeff, do you sort of agree with that view that trust is one of the big assets that credit unions have in sort of competing with banks and other new entrants into banking markets?
Yeah, absolutely. I think, the difference I always say between a, bank and a credit union is, banks tend to be very process driven. They try to make it very efficient, and they have processes that drive everything, whereas a credit union, we're very people driven. Each member, we look at members' needs, we know our members, we try to get to know our members, we go deep in understanding their needs, and we don't follow, oh, here's a step-by-step process. We sit down with a member, we understand their needs, and we look for a way as to how we can best serve them. And I think that's the real difference, is we're so interested in the member, and we don't have this shareholder where we have to think, oh my God, we got to have this return to the shareholder in the next quarter. We take a much longer term. We can take a longer term view. We want to, one of the real founding principles of credit unions is financial inclusiveness, and we want to ensure we're inclusive and that we serve the needs of members across all communities.
One thing I would add to that is, when you talk about user design principles and technology, people are talking about being customer-centric and customer-centric design, and credit unions are inherently member-centric. And so we've built our products around our members and around what our members needs. So we don't actually even need the device of saying we're customer-centric, because that's inherently who we are. Whereas when you're serving investors, it's a device that you then have to communicate to your investors, how we are adding value to customers.
So are the products actually different? Because what you just said there, Mitch, is we're sort of member-centric, and so we've designed the products in a member-centric way. But earlier we were sort of saying, well, actually the products are pretty much the same as the products the banks deliver. So not quite sure how I'm throwing this question too, but are the products the same? Is it just the way you deliver them, or actually are the products themselves sort of somewhat different because of what happens when things go wrong, perhaps? Or
the products are fundamentally the same, and I think the reason for that is really around helping our members understand what we're offering. So if we were to have a completely unique product, there's a lot of education involved in that piece. That's really the role, I think, of fintechs. We're there, they can use venture funds and lose money to create new products. Our role is more to deliver kind of established financial devices, products, but then how you deliver them, to your point, Benjamin, is the difference. When a member's having problems, we want to talk to them and hear about how we can help the member and get them through that challenge. We pride ourselves in listening to our member stories and finding those right solutions. And our accountability is to making that member right, and making the membership right, versus that accountability to profitability. And that is what why the delivery experience is different.
If you don't mind, I'd love to. So we're building a product organization for the first time at Beem, and I think the thing, and I haven't worked inside a big bank, so somebody listening maybe will sort of challenge me on this, but a lot of what drives what products your end customers get is the viability of those products, right? The overall health of the financial institution, the profitability of them. And, and not to say that we don't need to generate profit in order to continue to invest, but that's not the driver of our products and the decisions we make on what products we actually offer, right? So the member is really, kind of front and center, truly, authentically, in the design of those products. And I don't know that you would get the same from, a big bank. Certainly the fintechs probably would be more comparable in that regard because they're solving a specific problem and they're coming at it in a unique way without any, sort of debt, whatever kind of debt that is, technology debt. But yeah, I think that's what makes us different.
Yeah, I mean, banks obviously vary, but yes, I think it is, on the whole, it is a little bit harder because they're getting pulled in different directions of what's going to drive profit versus what's best for customers. And those things don't always align. I mean, they don't always align for credit unions either, but you have slightly fewer conflicts.
And there are plenty of good banks out there.
Indeed. Jeff, I'd love to bring you in on a question I've sort of had for a while, because we're often on this podcast, we're often talking about digital banks, but we almost never talk about digital credit unions. And there's a bit of me that's sort of thinking, well, why is that? Is that just a function of capitalism, that it's a lot easier to go and find a few rich people to get some money to set up a new bank than it is to pull a whole load of people together and say, hey, let's form a member-based credit union? I mean, are we seeing new credit unions getting formed?
We're not seeing a lot of new credit unions being formed in, I would say, the Western markets, North America, Europe, Australia. In fact, what we're seeing there is you're seeing fewer and fewer credit unions, as credit unions tend to start, very small because they're sort of ground up institutions. They grow, but what's happening in the maturer markets, the Western markets, where there's huge options for people to find financial services, credit unions are merging. So they're getting larger so that they have access to the resources, the capital that they need to make investments to remain relevant in a highly competitive marketplace. Conversely, if you look at areas in South America, Central America, Africa, credit unions are growing rapidly because, again, it's around financial inclusion, where there are just large underserved markets and people don't have access to bank accounts or financing products. And credit unions, unlike banks, can really step in, and it gets back to the earlier conversation, and focus on the needs of a community of the members of that credit union and really find unique ways of serving. What we're starting to see is, certainly in Canada, that we do have members looking digitally. In the past, one of the restrictions within the Canadian market has certainly been that credit unions were provincially regulated, so they could only have members within the boundaries of the province. We're now seeing credit unions go federal, so they have the opportunity to operate across the entire country. And some of those members are now looking at going digital first. So it's just again, they're now expanding and saying, yeah, we're going to be a credit union for a generation that's far more mobile and moves across the country and doesn't stay within a geographic area, but it really sees themselves as a sort of a little bit of a nomad, moves around. So yeah, it's happening. It's just a transition of the sector overall.
Thank you. That was a great answer. Sue, I'd love you to build on that around how do you become more digital as a credit union? Because it's easy to picture a sort of traditional credit union with in-person service, really listening to customers, as Mitch was saying. How do you start doing that in a more digital way?
Yeah, well, I mean, I think first of all, you need the tools and the technology, and I think that and you need to really have the capabilities. Like, I think that old sort of I don't know, not joke, but whatever, like a fintech and a bank walk into a bar and the bank says, I'll have what you're having, and the fintech says, I'll have what you're having. Like, it's, to me, I mean, we need the very things that make the fintechs special, right? Which is the talent and the technology. And I think that's one of the things that Beem And a lot of credit unions across Canada are starting to do is make choices about, the technology that we need in order to drive, our mission and continue to be relevant. And so we just recently made a decision to choose a different digital banking technology platform, which, is a pretty controversial move amongst our credit union colleagues. But really, for us is about making sure that we remain and thrive and are relevant to our members in a digital world. So I think it's about the very same things, right? It's just thinking a little bit more like, with an innovation mindset.
Mitch, I didn't mean to. Thank you, Mitch. I didn't mean to imply that Credit Union of Colorado was a traditional credit union. I simply meant that it was easy to picture the idea of a traditional one. But so Mitch, tell us how Credit Union of Colorado is embracing those same challenges that Sue is talking about.
So we have over 100. We have 170,000 or so members, and about 120,000 of them are active digital banking users, and they are all over the United States. We have members in almost every state, and we have members that join from other states that don't even live in Colorado. So we're very much a digital bank. However, I think the core values that people think of us about is those person-to-person interactions. And we've done some testing around video banking and some of those pieces, and we found that the digital customers really don't want to interact that way. And so to Sue's point of where we need to find a way to deliver that relationship value in a way that makes sense to a digital native. It is that some of the new innovations we're seeing with generative AI is that proactive understanding of members' transaction histories. All of those pieces are things we're working on. I don't know if we've cracked that nut yet, so we're working on those pieces. We know that to be relevant, we're going to need to be digital first, and members are going to call us or come into our branches for those complicated situations. And we need to be able to focus on over-delivering in those opportunities.
Fantastic. Okay, now that we've taken a look at what credit unions are and how they're serving their customers, in the next half of the show, we're going to dive into some of the challenges that they face and how they can overcome them, which is all going to come up after this super quick break, so please don't go anywhere.
The time for community banks and credit unions to win is now. While the big players and exciting new challenges grab headlines, regional institutions are at the heart of the banking ecosystem, putting the service back into financial services. Serving their local communities, these organisations around the world have a unique advantage over their competitors. They have deep, established roots with their customers. They offer a local, personal service, and they're not tangled up in the legacy tech mess that the big banks are. To read, watch, and listen to what else we've got to say about them and how they can win, visit 11fs.com/communitybanks. That's 11fs.com/communitybanks.
Welcome back to Fintech Insider Insights, where we've defined the role and some of the opportunities that credit unions provide. And now we're going to focus on some of the challenges and the opportunities and think about how they can win customers in an increasingly digital world. Jeff, I'd love to come to you first as sort of representative of sort of credit unions as a whole. Can you tell us a little bit about some of the challenges that maybe credit unions are facing? I mean, we talked about sort of digital as one obvious challenge. You also mentioned how, in effect, the number of credit unions, at least in Western markets, is sort of shrinking because, credit unions are starting to sort of merge. But is the member base shrinking, or is the member base growing in markets like Canada? What are some of the challenges facing the credit union movement?
Yeah, I think the member base continues to grow, albeit fairly slow. The biggest challenge across more of the mature markets is an aging member base. So in Canada, over 40% of credit union members are over the age of 60. So it's a graying member base, and that's a concern. What we're also seeing is it's harder to attract younger members. There's been sort of a shift where at one point, a lot of young people aligned with credit unions. What we're seeing now is there are just so many choices, and especially digital choices, that it's harder and harder to attract younger members. And it's certainly in the Canadian market we're seeing is, population growth is really coming through immigration, and a lot of the new Canadians coming to Canada aren't choosing a credit union. So our challenge is, how do we appeal to a younger Canadians and to people who are moving here for a new life? So those are really the challenges we're facing. And I think that it's, as we go through the digital journey, it's how do we remain high touch, but also high tech? Like, how do we balance this need to serve members against becoming not just another, high tech sort of process, mobile process? It's really that journey that we continue. And I think all members are looking, how do we serve members through a digital experience, but keep that high touch and make sure it's really about them?
I'm loving your people, not process theme. Sue, does that resonate? What Jeff is saying?
Oh yeah, absolutely. I've only been in British Columbia for a year, and I lived in Ontario, which, for listeners, is in the middle of Canada, and so British Columbia is on the very far west coast. And over the last 3-4 months, we've had meetings in regions of British Columbia. The most recent one is Prince George, which is a community of about 100,000 people, and it's in the northern part of BC. And I think that was like a big eye-opener for me. I lived in downtown Toronto, thought I was very familiar with, remote or rural versus urban. But when you, land in Prince George in a, I don't know, whatever, -8 or whatever the thing is that you're actually helping to crank the, no, I'm just kidding. It's not that bad. But, but you do see this, and it's phenomenal to see and talk to members. And, the community is so important to members of credit unions. Like, it's about actually being, interested in and involved and wanting the community to thrive. And when you see these communities, it's just with such a different lens than I think, anyone else could serve. Right. Like, so I think, we're very much people first and digital first. We really believe that there's something special about our ability to serve, in a very human, caring, supportive way for when people want to be served that way.
Mitch, are you seeing the same trends in the United States? I mean, I believe so, but are you seeing that same thing of a sort of slightly aging member base among credit unions, and maybe a struggle to reach new Americans? I'm loving this expression of new Canadians. Are you seeing the same sort of challenges of trying to appeal to new communities in American society?
I can't speak for all of America, but I can speak a little bit for Colorado. So the population of Colorado has been growing very much. We call them new Coloradans, would be the positive spin, long-term natives. So not always the positive spin on that growth. But when we're seeing that growth, we are seeing actually significant growth from younger members. And I think in particular, some of the social consciousness that Gen Z in particular is very much more aware of, finds the trust and the member service side of what we do very attractive. So we've actually seen a shift. 10 years ago, I would say we were concerned more about the aging population of our members. And we've seen that shift, particularly to young millennials and Gen Z, and we're seeing a lot of growth there. We're not seeing the full relationship from those members. I think that's pretty consistent across banks as well. We're seeing individual products. It's not necessarily the old term of PFI that we're seeing from those young members. So pick and choose their services.
Jeff, I realize you probably can't single out individual Canadian credit unions for praise on a sort of public podcast, but Are you seeing, among the sort of wider membership base, sort of credit unions that are doing better at staying relevant to younger customers? Are there things that you're seeing certain credit unions trying or doing that are sort of helping them to reach out to sort of younger Canadians, or to your point about new Canadians? Are they, are there any credit unions that are having success with, different communities or new communities?
Yeah, there's no doubt that there are, different members because they're members of different sizes. So clearly there are members who are focused on shifting their members to digital channels, looking at improving their digital channels, and really are investing heavily on how do they improve their digital experience? How do they onboard members easily through a digital, because a lot of people don't want to go into brick and mortar branches anymore. They want to join virtually. I agree with Mitch's point. A lot of people are starting not to look at a whole relationship, but how do I join for a product? How do I join because I want a certain service? How do I join to align? And I think one of the challenges that we're trying to figure out is how do you make that work for the member? Because I think certainly in the Canadian context, it was always about getting a member and then getting all of their banking relationship. You're loyal to my institution and everything will come from it. And I think that's not the way the next generation thinks. They look for the best. And then how do I integrate the best through mobile applications? So we have members who are saying, hey, I want to be part of that, and I'm going to find a seamless way to integrate into it. And that's certainly happening in the small business market as well. And small businesses love credit unions because we don't take a cookie cutter approach. We can listen to their idea, work with them to find the right financing, but they really need a high level of integration back into accounting packages. And we're going to see even more of that as Canada moves towards open banking in the next few years. This is a huge trend here, which you've got in the UK and Australia and elsewhere in the US, but we're just going through this journey. And a lot of our members are focused on how do I make sure that through open banking, I just make the integration seamless and be part of that members' complete financial picture. So yeah, as far as new Canadians, newcomers to Canada, certainly we have in different markets focused on how do they support that transition. And it's more than just getting them a bank account. It's more about how do you support them into settling into the community. It's very disruptive to move from a country, and how do you become part of their total settlement and becoming just part of the community in which they live.
Really, really interesting. Sue, Mitch, maybe a bit build on that. Just this big question of how do credit unions stay relevant to younger customers, or become relevant to younger customers, or indeed new Americans, new Canadians, and so on. Sue, is there anything that either you're doing at Beem or that you're seeing some other credit unions doing? Because if we had banks on the call, banks are not always quick to praise their competitors, but credit unions are much more collaborative. So maybe maybe you'll be up for sort of saying, hey, actually, there's another credit union that's doing some great stuff. Do you see any credit unions, including Beem and in a moment Credit Union of Colorado, that are, you think, doing some of the right things to stay relevant to younger members?
Mm-hmm. Yeah, for sure. And I'm Mitch. I want to definitely spend some time learning from. I think we're similar size and similar ambitions, but Innovation Federal Credit Union in Canada is one that is, I admire. They're ahead of us in our digital journey, and just recently they were posting on social media about their mobile bank that was visiting a community, and I can't remember, I'm going to make this up a bit, but maybe it was at like a farmer's market or something like that. But it literally was like a big RV, and it's kitted out with an ATM and advisors. And so, I think the thing about this younger generation, and again, my example of Prince George, I mean, it's not a booming city. It's a town. with 100,000 people living out in various communities, and they're not necessarily close to branches. And so, young or old, they need to be able to get access to, financial services. And so that's something pretty cool. Like, when I first saw it, I thought, oh, I mean, it's innovative in that an RV with an ATM is not sort of like what you would think of when you think digital first, but it's being able to be where you need to be to serve your members. But we also, that's the one thing, because I've been trying to figure out this credit union cooperative values, and how we really truly live those. And there's a lot about the member, but I think there's a lot about the community and the collaboration between credit unions that kind of underpins that. And even in our market in British Columbia, we have some pretty big credit union peers who are doing great things as well, like Van City and Prospera and a number of others. And even though we compete, we're all kind of investing in technology and investing in people. And I think it's good to see it, it's good for the credit union space in Canada. And it's, I think one of the differentiators for us.
What do you think, Mitch? Do you agree?
Yeah, thank you, Sue. You gave me some time to think about credit unions here that are doing a great job attracting younger members.
Yeah.
I don't know if I could highlight one in particular. There's some really interesting credit unions doing some really interesting work. They're experimenting, and we're very much embracing this need. When we all talk to each other, which is fantastic. And I feel like we're honest with each other. So, we work with, there's many large credit unions in the state of Colorado that we meet quarterly and talk about the technology and how we're making our technology more adaptive. There's Michigan State Federal Credit Union that's doing a lot of innovation and a lot of startup type work that we meet with fairly regularly and talk about our solutions. And then our digital banking provider, we have a really strong community with them and with their customers. And so we get together and talk about what we can do that will create a better experience for all of our members, because we're not really competing against each other. There's a level of that, but we're competing against these much larger organizations with much deeper pockets. So by pooling together, we can innovate at that pace of those larger organizations.
Jeff, on that theme of sort of working together and talking to each other and competing with much larger organizations, obviously firms like, Bank of America or Royal Bank of Canada, Scotiabank, these are big, national institutions, Chase. They've got huge resources, JP Morgan Chase, global organizations, Citi, these huge firms with enormous resources. Are there things that credit unions can or are doing to sort of collaborate, to cooperate, to join forces, to partner, to maybe mitigate a little bit of that, investment disadvantage that they have of being smaller? Or is being relatively smaller actually an asset? Am I getting it wrong?
I think you're not getting it wrong. It's just that we're in an environment where, to Mitch's point, we cooperate, but we also compete at times. So it creates an interesting dynamic that wasn't there before. If you go back to the history of credit unions were all bonded. So you couldn't belong unless you were part of a certain community or a profession. And now we have, most credit unions are open bonds, so anyone can join. So I think we believe in cooperation among cooperatives, and we find ways that we can work together where we can get scale, where we can leverage back office things where the customer member never sees it. That's really where credit union's strength is, that we do have a history of working together on the things that, we can use our collective scale to help our collective members. And we're really good at that. That's one thing about cooperatives is because you're focused on the members, all of you focused on the same things, and you're not focused on the shareholder that you have to serve in addition to serving members. You can do some really cool cooperative stuff. And we're seeing it with digital platforms, with, if you look at open banking, trying to get together and finding providers for for open banking, mobile solutions. We're working to bring together solutions and offering it out to our members to that. So, yeah, I think that, that is the advantage. Where you're trying to compete against the big ones, listen, we're never going to beat them on the amount of resources and capital and all the things that they have access to, even collectively. We're, a small part of a very big market. Even if we became one big credit union, we still wouldn't be big in financial services in any of our markets. But what differentiates us gets back to what we talked about at the beginning, is we can focus on what the needs of the member. So we can really serve a niche market for that member. We can approach it in a totally different way than any others.
Okay, well, thank you. It was a great answer. We're almost out of time, so I'm going to ask you all sort of one last question. So we've got about 3 minutes left. So I suppose my last question is, what one or two things can credit unions do to continue to be relevant to their members, for the sort of coming generation? What are the things or the most important things you think credit unions need to be doing now to stay relevant? So, Sue, what would you say are the sort of most important things, or the most important thing to stay relevant going forward?
Hoping you were going to go to Mitch so that I would have time to think about this one. But
okay, well, let's do that. Let's do that. I went to you first last time. Mitch, go. Mitch, you're on the spot.
Are you gonna,
this is how it goes.
You're going to bounce the ball over here.
I gotta be good at this. This is my anyway. I'm just kidding. Sorry, Mitch.
Do you want time to think about it, Mitch? I'll answer.
Go ahead,
Okay,
Jeff.
Sure. Listen, I think that most important thing is really just to continue the investment in the digital journey. We know in these marketplaces, and listen, I travel and get to see credit unions. All emerging credit unions are investing in one thing, and that's the mobile digital experience. The difference is, if you go to Brazil, you go into Costa Rica, they started with a digital experience. We're going from the old to the new, but they start there. But everyone is going digital. No one is looking to go back to branch banking, and ATMs are sort of yesterday's solution. It's really about mobile and really having a great digital solution from onboarding through to different products and services. And then the last piece is just making sure that your solutions integrate well through APIs with others, because it's not, well, I'm going to deal with one. That's just yesterday's thinking. I'm going to deal with different institutions, and I want those institutions to integrate well and create an overall great experience for me as the member or end customer or end user.
Fantastic. Mitch?
Thank you for going first, Jeff, so I can say yes. I completely agree on all those points. With the caveat then of adding onto that, listen to your members, continue to listen to your members, listen to your younger members in particular, obviously, and your prospects. Because if we're just listening to our members, we're missing the opportunity then for growth. And so really having that, and then also really documenting your core values. And even in this new digital journey, don't lose track of your value proposition and what you're delivering to those members. So those are all very important pieces to keep ourselves relevant as we move into this totally different age.
Okay, I'll be quick. I yes and yes and. They're they've said it really, really well. I would say the only other things I would add would be, we are going to see continued consolidation of smaller credit unions in our markets, and we want them to survive. And so I think focusing on readying yourself for scale, which is what we're doing, so that we can, be there for smaller credit unions if they want to join us, and also, attract, bring in some talent that maybe has some experiences that, your existing team doesn't have, because that kind of thing breeds, new ways of thinking about things that just build on the depth of experience of your your team. And so those would be two more things I would say to add.
I love all of that. That's just, all of those points are just such fantastic advice for everyone listening to this. So that wraps up today's discussion. Thank you so much to the three of you for joining me. It's been an absolute blast talking to the three of you. Frankly, it didn't feel like work at all. Where can people find out more about you all? Mitch, where can people find out more about you?
Well, obviously, you can find out more about the credit union at cuofco.org. Or you can also find me personally on LinkedIn. I'm happy to talk to folks, collaborate.
And Jeff?
Yeah, it's ccua.com for the CCUA and certainly LinkedIn for me. So Jeff Guthrie at LinkedIn, and you will find me.
And Sue?
Yeah, and beemcreditunion.ca, Beem spelled incorrectly, so BEEM. And then obviously on LinkedIn as well.
Fantastic. And you can find me, Benjamin Ensor, on LinkedIn, though I am going to try and get a job as Jeff's deputy because I just think Jeff's job just sounds great. So thank you all so much for listening. I hope you've all enjoyed this. If you like what you've heard, please do follow our podcast. Please let us know what you'd like to hear about on future shows. If you want to join the conversation, you can find us on social media. Just search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. Thank you all so much, and goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Sized goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.